But let's pretend that we're going to have a beautiful month of June. Okay. If we look at gamma information, we see it rolling higher. The call wall's rolling higher. Everything's happening that would suggest the market is going to lift here at the beginning of the month, and who knows for how long that'll be. So let's assume that the probabilities will play out in our favor, and we're going to keep adding. This is the last day I'll be adding names to a portfolio. Then, there won't be any cash in the portfolio by the end of today. Okay. And then everything I do going forward will be about managing the positions. If we hit a target, we book some profits, we raise stops. Even if we don't hit a target, we start raising stops, right? So if the whole thing implodes, at least we get paid for the work we've been doing. We get stopped out, but our net worth hopefully is higher by the time we get stopped out, assuming there's no, massive implosion. Okay. So that's one process of the ARMR investing way. At this stage, we start raising stops and booking some profits at targets. A more conservative investor is going to be building a cash position over the next few weeks as you book profits at targets. As a couple names hit stops, you're not going to reinvest the money. You're going to start building a cash position way before you need it. So when the market does roll over, you already have cash and you start building alpha because the market's going down, you got cash. A more conservative investor does that from here on out. Today is the last day to put cash to work. And then the next day, Wednesday, you start managing your success. And if you get stops hit, you don't reinvest it. You start building cash. Okay. A more aggressive investor keeps trading until such time as we get risk monitor red. All right. Are we on the same page there? So let's look at a couple names that are at the top of my whiteboard to add to the portfolio spreadsheets to finish out any purchases I'll be doing. And one more thought here. So a more aggressive portfolio, if you get stopped out of something, if you book a profit, you rotate the money into a new idea. So it's not that I won't add new names to the spreadsheet in the next couple of weeks. I might. I mean, if things are ripping higher and we hit some target, book some profits, I'll take some of those profits and I'll add to the spreadsheet. Okay. Some portfolios I'm managing, I'll be reinvesting the money. Others that are conservative, I won't. Okay, so it's up to you to decide how you want to run that. So let's look at top names, okay? AMD, I'm with you 100%, Erez. I really like the chart pattern there. It looks interesting. Having done the work, and Silver Fox did this for us on Friday, it just makes more sense to me to own shares of Xilinx. Okay, they're being taken over by AMD. So you're going to get all of the upside of AMD stock and a little more upside because it's still trading at a discount to the takeover price. All right, so why is it trade at a discount? There's risk that the deal gets broken. Okay, that would be a bad day for Xilinx, and it would probably be a one-day event because I think the basic business of Xilinx is phenomenal. So I want to own the basic business of Xilinx. And I'm not really concerned that the deal's not going to go through. Here's some upside to Xilinx. Between now and the time it gets taken over, somebody else could bid for it. All right. And then you get a bidding war and the stock goes even higher. So there is risk if you're buying the company being acquired that the deal falls through. The reward is that the stock will go up with AMD and then close the gap as it gets taken over and we make a little extra money. So I'm going to make that money. Okay, I'm going to buy Xilinx. And I would use the low of yesterday as my stop, all right? I've got my eye on MU. It closes above the high of Thursday. If it can close above the 50-day moving average, take out the high of this big down bar. We had, quote, negative news in here that it totally shook off, that I'm going to want to own this if it goes above the 50-day. Okay, these are moderate risk investment ideas. Moderate risk. They're going to go in the moderate side. All right. Okay. GE, this is going to be a moderate name. All right. That chart pattern is phenomenal. I'm going to fit that into the moderate side of the spreadsheet if I can. Okay. I'm going to try to buy weakness. I'm not chasing GE. If it gets away from me, I don't care. Okay. But if I can get weakness, big up day, then you get a down day, which is happening right here. And Ford had 2 down days before it reversed and skyrocketed. So I'm going to be looking for weakness to buy the GE. Okay. I would really like to get some shares of mRNA. God, that's a great cup and handle, and it's starting to break out. I don't, it's too many days away from the entry point, so I don't know if I'll do that today. It might not make it. Okay. I'm going to be looking to increase my position size in MSOS. Okay. So if this thing breaks above the 50-day, the last piece to the puzzle, we've been building the position size in here, and I'm going to have my final position size on if it takes out the 50-day moving average. Okay. SILJ, the silver bullet train, is literally leaving the station today. If there's any more exposure you want in the precious metals, and what I may simply do is jack up my SILJ position again. Okay. I am going to be adding GrowGen to the portfolio. This is a high risk name. The close above the 50 was the key. I could have done it on Friday. I decided really I wasn't buying anything on Friday in front of a 3-day weekend. I'll be looking to add this position today. If it takes out the low of Friday, I will exit. It'll be a failure at the 50-day moving average. But if it can stay above here and then, of course, breach the downtrend, we could have a major upside in the stock. Okay. And I'm considering adding Tenable. This is a high risk name also, and it goes along with our other cybersecurity names. At this stage in the cycle, I'm not looking to add any more a low risk type of investment, which is what Disney is to me. I want to fill out my spreadsheet with the aggressive names. I've earned the right to take that risk. I want the alpha if this market continues to run. Okay. Here's a really interesting statistic for all of you Bitcoiners out there and gold miners out there. Bitcoin started the year around 35,000, January 1. Gold started the year right around these prices, January 1. It's the tortoise and the hare, and the race is still on. I retweeted that from one of the guys I like to follow, who's a precious metals guru, Andrew McGuire, and it was brilliant. It's so true. I remember a few weeks ago when Bitcoin was 60,000, and I got a lot of flack about how I don't understand Bitcoin. I don't understand cryptocurrencies. Why do we waste our time holding precious metals? And a couple of weeks later, the performance is pretty much even since the beginning of January. That's just food for thought. We got to get our ego out of the investing process. We buy weakness in the midst of strength. We raise stops. We book profits when assets skyrocket. We don't drink the Kool-Aid. And we understand the assets we're working with. Huge reward equals huge risk. That's just food for thought.